Inflation. Inflation is the sustained increase in the prices of goods and services. It occurs when money loses value over time. Central banks, like the Bank of Mexico, aim to control it, keeping it within a 2 to 4% annual range. Factors like rising production costs, excessive demand, or currency devaluation trigger it. Imagine you buy a coffee for $3 today. In a year, that same coffee costs $3.50. Inflation has made your money buy less. If your salary doesn't rise at the same pace, everything feels more expensive. Living with inflation is like running on a treadmill. You work harder, but don't get ahead. Savings dwindle if not invested wisely. Even basics like gas or food get pricier, affecting your daily budget. Sometimes it feels like money melts in your hands, doesn't it? Currency. Currency is the medium of exchange accepted in a society. It can be bills, coins, or digital, like the Mexican peso. Its value depends on collective trust and economic stability. Without trust, a currency loses its power. For example, in crises, people may reject a weak currency and prefer bartering or foreign currencies. Currencies also reflect a country's history and culture, with symbols on bills that tell stories. A 100-peso Mexican bill features Sor Juana, a cultural icon. Think of a market. You hand over a 100-peso bill for fruit. The vendor accepts it because they trust they can use it later. Without that trust, the bill is just paper. In some countries, people use US dollars because their local currency isn't reliable. Using currency is like a social pact. We all agree it's worth something. But when trust falters, chaos emerges. A strong currency facilitates trade, while a weak one can lead to poverty. It's fascinating how a piece of paper can move the world. Interest is the cost of borrowing money or the profit from lending it. It's calculated as a percentage of the initial amount. There's simple interest and compound interest. Suppose you borrow 1,000 pesos at 10% annually. By year's end, you owe 1,100 pesos. If you don't pay, compound interest makes the debt grow faster. Interest can be your friend or foe. It helps savings grow, but sinks you if you don't pay debts. Compound interest is like a snowball, small at first, massive later. We've seen how money loses value and works as a medium of exchange. Now, let's dive into topics that directly hit your wallet. Taxes. Taxes are mandatory payments to the government to fund public services. They include VAT, income tax, payroll taxes, property taxes, or gas taxes. You pay them when buying, working, or owning something. Their amount depends on your income, expenses, or assets. In Mexico, that is 16% on most products. When you buy a movie ticket for 100 pesos, 15 pesos are VAT. That money goes to the government for roads, schools, or hospitals. If you earn 30,000 pesos a month, income tax takes a chunk of your salary. Local taxes, like property tax, fund municipal services. Paying taxes feels like losing part of your income, but without them, there'd be no infrastructure, security, or public services. Some see them as theft, others as a necessary contribution. The truth lies in balance. You pay, but expect the government to use it well. Nobody loves taxes, but they're the price of living in society. Banks. Banks are institutions that store, lend, and invest money. They offer savings accounts, loans, credit cards, and services like transfers or investments. They earn by charging interest or fees. They also regulate money flow in the economy. You deposit 500 pesos in a savings account. The bank uses your money to lend to others, paying you a small interest. If you take a loan, you pay higher interest. For example, a mortgage for a house can have interest that doubles the initial cost. Trusting a bank is convenient but risky. If it fails, you could lose something, though protections like Mexico's IPAB cover up to 400,000 pesos. Banks also offer digital tools, like apps for payments or investing from your phone. Choosing a bank is key. Some charge high fees for everything. Others offer better returns. Compare rates and read contracts to avoid surprises. A bad bank drains your money. A good one helps it grow. Banks, they guard your money, but always want a bigger slice. Investment. Investment is using your money to generate more money. You can invest in stocks, bonds, properties, businesses, or index funds. It involves risk, but also potential long-term gains. You buy company shares for 1,000 pesos. If the company grows, your shares are worth 2,000 pesos. If it fails, you lose everything. Or imagine investing in a local cafe. If it thrives, you get profits. If not, your money's gone. Investing is like planting a seed. With patience, it can bear fruit. But fear of loss stops many. Diversifying is key. Don't put all your money in one place. Index funds, which spread risk across many companies, are a safer bet. Learning about investments takes time but gives you control over your financial future. The trick is to start small and not put all your eggs in one basket. Recessions. A recession is when the economy shrinks for months. Businesses sell less, layoffs happen, and growth stalls. It typically lasts 6 months to 2 years. It can be triggered by financial crises, pandemics, or failed economic policies. Consumer confidence drops and people spend less, worsening the problem. Governments often intervene with stimulus, like lowering interest rates or providing direct aid. In a recession, a clothing store closes because no one buys. Employees lose their jobs and spend less, creating a vicious cycle. Empty restaurants and idle factories become common. Families cut expenses, skip trips, and buy essentials only. Even successful businesses suffer as fear halts purchasing decisions. Living in a recession is like walking against the wind. Every step is harder. Fear of unemployment is everywhere. Uncertainty weighs heavy, and planning the future becomes a challenge. Debts pile up and savings vanish fast without income. The good news is recessions always end, though it doesn't feel like it. The economy recovers, but it requires patience and adapting to tough times. A good credit score is like a master key. It opens doors to better loans. A bad one is like carrying a heavy backpack. Regularly checking your credit report helps you fix errors like incorrectly reported debts. Paying on time and keeping debts low are key to improving it. Pay on time and your score will be your best friend. A bad score is like bad gossip. It haunts you for years. Value. Value is what something costs or represents in the market. It can be objective, like the car's price, or subjective, like the sentimental value of a gift. The economy measures it in money, but people measure it with emotions and needs. A new phone costs 10,000 pesos. For you, it might be worth more because it connects you to friends or helps you work. For someone else, it's just an object. A ring inherited from your grandmother may fetch little at a pawn shop, but be priceless to you for the memories it holds. Understanding value is knowing why you spend. Sometimes you buy expensive things chasing status, but they don't bring the happiness you expect. Other times, something cheap, like coffee with a friend, is worth more than 1,000 luxuries. In finance, value also changes over time. A house's price can rise with demand, or a car's value drop with wear. Value is a balance between what you pay and what you feel. Learning to distinguish it keeps you from spending on what doesn't matter. Ultimately, true value lies in what money can't buy. Time. Time in finance affects money's value. A peso today is worth more than a peso tomorrow due to inflation and interest. It's the foundation of compound interest, which multiplies savings or debts. Also, time shapes investment strategies, short-term for quick goals, long-term for lasting wealth. If you save 100 pesos today at 5% annually, in 10 years you'll have over 160 pesos. Wait longer, it could be 300 pesos in 20 years. But if you spend it all now, time gives you nothing. Choosing between spending now or saving for tomorrow is a daily decision. Time is like a silent partner. It works for you if you use it well. Ignore it, and it takes its toll. Every day you save or invest is a step toward financial freedom. But time also punishes. An ignorant debt grows like weeds. Planning with time makes the difference between stress and peace. The phrase "time is money" isn't just a saying, it's pure math. We've covered 10 key financial concepts: inflation, currency, interest, taxes, banks, investment, recessions, credit score, value, and time. Each impact your daily life, from what you buy to what you save. Understanding them not only protects your money, but empowers you to make better decisions. The economy isn't a mystery, it's a game with rules. Learn them, and you're one step ahead. Subscribe if you want more guides like this.